Hello, mortgage fans. So we're back for another mortgage market update, and this week we have the Mr. Paul Asare with me. How are you, sir?
I'm fine, thank you. I'm doing very well. I'm busy, so yeah, it's always good to be
It's
busy.
busy and it's sunny. What more could you
Yeah,
possibly want in life?
exactly. Yeah.
Cool. Well, the reason why I brought Paul in today is we're going to talk about a very large part of the business that we do, which
Mhm.
is remortgaging clients, which
Yeah.
is a huge topic in itself. So we can't cover everything today, but what Paul's got specifically is a case study that he did recently,
Mhm.
just to sort of bring this to life and to give you an example of what we talk about. And then we'll talk about remortgaging slightly more generally, and then finish off with a bit of Q&A of the most commonly asked questions on this area. So that's what we'll be going through today. But to start off as an introduction, I thought it might be worth throwing it over to you, Paul. Why don't you give us a bit of background about yourself, and then we can get into the case study.
Yeah. Prior to joining Rose Capital Partners in I think 2018, we're working with banks. I don't know whether I can mention their names, but work with a few banks. I'll say. In mortgages, I had a foray into financial planning and advising. So in essence, I've got a depth of how they call information as well as experience, especially with one of the banks that I used to work with. When it comes to the mortgages, we were actually underwriting the mortgage ourselves in the branch. So I know what information underwriters are looking out for, what sort of detail or what sort of quirky things they normally look out for. And so that gave me a lot of knowledge, as well as once I joined the brokerage, you work with different firms. Some people also doing their mortgages from, let's say, abroad, who live abroad, etc. So you in essence come into a plethora of knowledge, and that's what I'll say I bring to the table when it comes to remortgaging and helping my clients have, like, in essence, get better deals. Yeah.
Excellent, excellent. Yeah, fun enough myself, but many moons ago, I did some underwriting myself when I worked at a very small building society. And it's funny when you go sort of poacher gamekeeper that you say you sort of see it from both sides. So
Yeah.
no, I think that experience and that background is really valuable, particularly when you come to advising clients because you see both sides of the fence.
Yeah.
Well, that brings us beautifully onto your case study, Paul. So why don't you talk us through the case you've got to hand? We'll talk through some details, and over to you again.
Yeah, in essence, when it comes to remortgaging, one of the things we pride ourselves with at Rose Capital is to help make our clients debt free sooner. But I had this quirky case that came up because my client was looking to rather reduce his monthly payments because he was thinking of in future relocating to a different country, and thought this was a time he also wanted to sort of invest more into his pension. So reduce monthly payment, have more money to go into my pension was the aim. And we initially looked at his existing lender, but the deals and sort of offers were not that competitive. And the good thing he did, which I would advise most clients to do, is his deal is actually maturing in the 1st of April. But then we started looking at this late November, so well ahead of time. And what I did was, because of his particular circumstances, there was the need to look at sort of interest only as part of the process. Now, had he gone to his lender, it's a bit more complicated. But where I added value is I know what lenders look out for. I specifically went to a sort of detailed fact find to find out what were his aims, what were his preferences, his risk profile, looked at all that, and then went into finding out which lender was going to give him the best deal for that particular type of mortgage we were looking to do. So it was partly interest, more interest only, and also some repayment part to it. And once again, where I mentioned it's important to speak to a broker is there are certain minimum criteria that lenders will accept for those type of cases. And I was able to filter it down, in essence, to about two lenders. And out of the two lenders, the one that we submitted an application for with was one that had the best deal. So in terms of giving you figures, the property was valued about £650,000, and the mortgage we were looking at was around £469,000. And I was able to get him a term of, but 1 second, I'm just checking some of the figures here. So I've got them to hand, and we're able to secure him a deal at 1.45%.
Wow.
For 5 years. Now, today, when I checked, had we not done it then, he would be paying about 2.02%.
Yeah.
So in essence, a massive saving because we got ahead of it. And typically, when it comes to interest-only mortgages, most lenders will sort of cap the lending at 20-year term. Sorry, up to the age of 70 or 25-year term, but we're able to push it to the 30-year term. So that's a good deal for the client, and he was very happy because we were able to get him the rate I mentioned at 1.45 for 5 years, and in essence got him whatever he needed.
Well, there's so much to unpack on all of this, Paul. I mean, you've touched every major point that I think we need to cover off. So let's go back over this. There's a couple of things I just want to pull out in a little bit more detail. The firstly is the timing. So I think you've absolutely done the right thing there. So you know, just as a general rule, we talk to our clients about 6 months before their current deal's up.
Exactly.
And what you often find, which you directly alluded to there, was you know, most banks will only offer you a product really about 3 months out from when you come to refinance. Now, that's really specific. And just to be really clear on this, we're recording this in March 2022. And the Bank of England actually raised rates yesterday to 0.75%. And you've given fantastic figures there. By simply talking to a client earlier, we've secured a product which is, what, about 0.5% cheaper than what they'd have got today.
Exactly.
On a, well, forgive me for my round maths, but 0.5% on a £400,000 loan is roughly, what, £2,000 a year in interest. So if you've saved them £2,000 in interest over 5 years, you've just saved that client £10,000 by acting early. And you know, that's a large-ish loan, but that's not a huge loan. So that sort of really does show. I mean, the bigger the loan, the bigger the saving. So I think you've illustrated that perfectly. So I think that's the one thing about talking to clients early gets you those big savings. And one thing I would urge anyone listening to this now is, if your remortgage is up, like, again, generally from 6 months out, but even if it's like this year, again, we're doing this in March, just start talking to us, because we can at least put some stuff in place. That's a big one. The other one I want to sort of go into a bit is sort of not specifically around remortgaging, but it's about interest only, because again, we deal with a lot of clients typically have higher incomes, have bonuses, and more need for interest only. Probably for anyone listening to this, they probably don't realize how complicated that is. I mean, there's probably 2 or 3 main things people need to be aware of. But when people talk interest only to you, Paul, what are the things you're thinking about that you need to take care of?
First, there are minimum income requirements. That's one thing. And one large part that most people don't realize is the level of deposit that is required for interest only. The reason why I say that is, in most cases, if you're doing just pure interest only, most lenders will say 50% you need to have. Some lenders are a bit more flexible. But also, another thing that they look at is also your minimum equity. So that sort of fits into the minimum deposit. So it's not as straightforward as some people think. Oh, I want to get an interest-only mortgage. No, there's so many variables involved.
I completely agree. I think the older heads like me and you, you know, certainly anyone who had a mortgage, say pre-credit crunch, I would say, are probably used to interest-only loans being really simple. It was just an option. It's like, do you want interest-only repayment? Would you want, you know, just an option then? Whereas now, and again, you've explained it really well, so I don't need to repeat it, but it's very much linked to your income and to the level of equity in your property. So if you're moving the size of the deposit, obviously remortgaging, it'd be what percentage. So as you say, most banks offer it if you're borrowing about 50% of your property value, but then up to sort of 75% of the property value. As you've done, you might do part and part, you might need a repayment vehicle. That's a really long conversation we're not going to have now. So I'm just going to flag that. That's really complicated, and I'm sure we'll come back to interest only as a topic, because that'd be really, really worthwhile, actually. Sure. I think we've touched on all the major points I wanted to touch on there, Paul. I think you've explained that fantastically well, actually. So I'm happy with that. So let's move on to some of the most commonly asked questions in this area. So some of this we might have sort of touched on, but I'll just ask you directly, and we can expand on it if we need to. So the first question is, how do I remortgage my house? So I was thinking, again, what that's talking about is sort of the process.
I think it's maybe straightforward, is get in touch with me or any of my colleagues at Rose Capital Partners to start off with, preferably 6 months ahead of time, especially in this current climate where banks just keep changing their rates almost on a daily basis, if we were to really literally say that. So when you get in touch, there are some information that I'll take from you, such as what's the outstanding loan balance, and what sort of deal are you currently on, and what's the value of your property. And the other things that we can sort of delve into as well, most importantly, is what are your plans? Are you looking to just do what we call a like-for-like remortgaging? So in essence, you're just bringing the existing balance over to a different lender, or are you looking to borrow a bit more to do some home improvements? These days, because of, let's say, post-COVID, many people want to either maybe add value to their properties, maybe want to get a bigger lounge, maybe change their kitchen, etc. We can look at all those and maybe add that to the existing mortgage. Or if you decided, as we will normally want to advise you to do, to help make you debt-free sooner, if you wanted to sort of reduce the mortgage, or you wanted me to reduce the term, which can have the effect of saving you interest overall, we'll discuss all that. And the brilliant thing we do is we offer either we can do that via phone call or maybe a video call, as I'm doing with you. So if you've got any questions, you can throw them at us, have that clarity of mind in terms of the value we add as well. So cool. Yeah, it's just a matter of getting in touch with us, and then we can just walk you through the process. Very straightforward.
Exactly right, because I think the process itself for a remortgage is relatively straightforward, isn't it? I mean, it's the same as if you were buying. So you still need to have a survey, you still need to do the legal work. Normally, the banks pick up the cost of that, and as again you sort of touched on there. So a lot of the surveys are done automated now, because particularly if you own the property, they've got land registry data. So a surveyor may not go to your house, but a bank will sort of give it an indication. And also as well, this comes up a lot. Don't get offended if the figure's a bit low. A lot of people get really upset by that. From our perspective, it's only does the deal we're looking to do make sense. So if the value's a bit lower than you think, but you still get the deal you want, don't get too hung up on that. And funny if you touched on there as well, if people are raising money for things like home improvements, I actually did a more detailed look at home improvements not long ago, so people can have a listen on that. But yeah, the process is broadly the same. And as you say, the main thing is talking to us for all the reasons you've explained, and then we really manage the whole process. So it's actually really, really easy when you come through a broker. Okay, so the second question then is, what is needed to remortgage? So again, this might be around documentation and bits and pieces like that.
Yeah, I think so. The main information normally I touched on a few of them: value of the property, outstanding loan size, term, etc. Document-wise, so if you are employed, we need normally 3 months pay slip. If in certain cases, it might be a bit more complex, whereby we need, let's say, bonus income or irregular income. We need a bit more documentation. We can always come to that, but I'm just talking about straightforward ones. So 3 months pay slip. If you're self-employed, we will need at least your 2 years tax returns and their corresponding tax year overview. So like a receipt to show you've made payment of your taxes. And then in a sense, technically, just a bit of information about the mortgage, because when it comes to that, and also 3 months bank statements. So those are the main things: bank statements, proof of income, and also identification. Because we need to make sure we are dealing with the right person, remortgaging the right person. So I'll say those are the main documentation we will need. And if case specific, sometimes you will need a bit more information, but just a simplified form of what you need. Yeah.
No, I completely agree with that. I think, yeah, you touched it. I mean, just the self-employed stuff, I mean, just if anyone's listening is wondering, as long as you've got 1 year's plus self-employed history, we can help, but the longer the better. And ideally a 2 year history. A 2 year history is ideal, but it's not a deal breaker if you're not, so it's a problem. But yeah, the documentation is fairly straightforward. Stuff you have to hand. It's just the thing with mortgages, it's document heavy process. You're not buying trainers or some new sunglasses. There is work, but we do most of the heavy lifting. Next question then is, can you do a remortgage yourself?
Yes, you can. But the question is, would you exactly know whether you're getting the best deal? Now, if you're doing it through us, there are exclusive deals that we have that you cannot get access to, whether you go onto moneysupermarket.com or any of those comparison websites. The other question that I tend to come across is, sometimes you don't know whether that deal will be done by that lender. You see the interest rate, and maybe that interest rate comes with loaded fees. We are able to determine which is the most competitive product for your circumstances. And also, especially with this cladding issues that we've had the last couple of years, you don't know, especially if that lender you're trying to switch your mortgage to is going to land on that property. Let us do the hard lifting, and then we, in essence, do all the research instead of trying with different lenders. We will be able to know which lender to place your case with. Obviously, it's utmost important that we get you the right deal and the best deal. So that's also at the forefront of our mind, but it's also to get you the lender who will do the mortgage for you. So as I said, if you wanted to do it yourself, yes, you can, but it's whether you are getting the right deal. That's the thing. And we can always get you the best deals when it comes to coming to us. Yeah.
Exactly. I think one thing that people are often surprised about when I talk to them is that we can often get a better deal with your bank coming through us than you going through them directly.
Yeah.
Some banks are particularly vocal about it. I've had clients say to me, I've spoken to my bank, they said, I'll go through a broker, it's cheaper. So it's not salesmanship, it's just the nature of it. And think about it, it's one of those classic things. It's just a business relationship. Brokers do a lot of business, and it's easier for banks to outsource the advice process, which is quite tricky for all the things we touched on today. You know, you directly talked about criteria, you mentioned cladding, property types, all sorts of things go on, and it's actually easier for banks to outsource that. So yeah, I completely agree with your comments there, Paul. You can 100% do it yourself, but you may not get the best deal. And also, what the best deal is very subjective. So some people are very focused on low interest rate, but maybe fixing for a longer period at a higher interest rate would save you more money over the long term. That's a particular dynamic right now. So best deal is very subjective, but we will look at what your goals are and then align it to that. So the advice aspect, I think, is huge. It's just
huge.
Having a professional to say, like, okay, great, you want to do that, but have you thought about this? Which you'll never get that when you're on your own. You just can't. So
there's even one aspect that I think that comes to mind. Sometimes in certain cases, based on the affordability assessment for some lenders, some clients cannot actually move their mortgage over to another lender. However, there are some lenders who will still allow the remortgage to be done if, for example, you're just in essence transferring that balance over, you're not borrowing anymore. But how would you know? You wouldn't know. We, the brokers at Remortgage Capital, know which lenders will do that.
It's that wonderful underwriting background you've got there, Paul. It shines through. And the very last question, which we have sort of touched on, so we can probably do this quite briefly, is how much deposit do you need to remortgage? I imagine there's a fairly straightforward answer to that.
Typically, I'll say averagely maybe between 20%. You can't even go all the way. There are some lenders who permit all the way up to 10%. But what you got to think about is the bigger the equity or bigger deposits, the better the deal you're going to get. Because you are then the bank sees you have less risk to themselves. So the bigger the deposits, the better the deals you're going to get.
It is as simple as that, isn't it, really? So I think I mean, it's not really happening at the moment, but if, say, for example, you're in negative equity or you are borrowing more than, say, 90% of your property value, we'd probably put you back with your existing bank because they'll always help you. So you've always got a home. But if as you say, Paul, the larger the deposit, the lower the rate, and starting with sort of 10% deposit or 10% equity in your property, going right to say 40% equity in your property. Once you've got more than 40%, it's the cheapest sort of. So it doesn't matter if you're borrowing 50, 60. So yeah, it's the cheapest once you've got a 40% equity or more. So I think that is us, Paul. We've covered a lot of ground there. We've covered a lot of ground.
That's good. Yeah.
So it's all that's left for me to do is thank you for your time. It's been extremely helpful. And as Paul said directly, and I'll repeat, we've talked about this quite a long way through. Remortgaging is one of those things that on paper looks very simple. Like, you've got a mortgage, you know what you're doing, you've been through the process. The one thing I'll just hammer home as a final point is, if you're not talking to an advisor, and ideally an independent advisor such as us, you're probably not going to get the best outcome, not just in terms of the product, but the actual advice itself. So please do all talk. Naturally, we think we're the best, obviously, but do get a good broker on your side, because it will save you so much money over the life of the loan, and that's what we really care about the most. So thanks again, Paul, and look forward to catching up with you soon.
Sure. All right. Thank you very much. Yeah.